All right.
Yeah, hit broadcast. Hey, everybody. Welcome. Hope you guys are doing great today on this beautiful Thursday morning in Charlotte, North Carolina. We got Carolina blue skies screaming at us, and we're going to just delight and entertain you with all kinds of detail on going into this PPP forgiveness application. We were just talking about it this morning, and one of our partners spent 5 hours with a client going through it. So hopefully Adam can take us through that in less than 5 hours today. But you know, you might want to have some Tylenol next to you in case it gives you a headache. Could be, but hopefully we'll make it a little bit less painful by having Adam walk us through that. So we will take questions throughout this thing, but and as you're doing it, hit us up on the Q&A for that part, and chat if you're going to harass us. But we've got a lot of ground to cover, and I know a lot of people want to dive into this thing because it is a royal headache. So Adam, take it away.
Yeah, thank you, Gary. Appreciate it. So I will apologize to everybody on the call in advance that was looking for playful banter. I will try to insert as much of that as possible, but I'm also sitting at my computer instead of on my iPad because we're actually going to do some real work here today. So I wore my work shirt, and I've got my sleeves to where I can roll them up. So the point of today's webinar is to dive into the weeds on the application of forgiveness itself. And the reason for that is that, you know, even though we've been saying over and over again, hey, don't submit your application until there's more information. Don't submit your application until they resolve the deductibility of expense issue. Don't submit your application until they potentially, you know, do something about the grant in terms of making, you know, anything below $150,000 an automatic grant where you just basically have to do a simple certification. Even though we've said that, you know, at the same time, whether you're on the 8-week or the 24-week period or somewhere in between, you know, no matter which way you skin the cat, you know, that covered period is coming up. And what you want to, what I think we need to be doing at this point is just making sure, hey, I just want to be double dog sure that we don't have a problem somewhere that I was not thinking through, because either A, I just didn't pay attention to it because Adam, Gary, and Joe just said, hey, don't do anything with it yet. Or alternatively, I didn't understand the instructions. And upon further reflection, I do actually have a problem based on actually running through the calculation. So I think the takeaway from this is, hey, let's look at the application together, and then we'll go ahead and you know, have you guys do your calculations, you know, just to make sure that, hey, you don't have a looming problem. But, you know, again, you know, the purpose of today is to just really get into details and answer any questions that you have with the details. So with that in mind, we're going to hop into it, and I'm going to go ahead and share my screen now. All right. As you guys can see, I have the application up here. This is the long form. I'm not going to fool with the easy form or the stuff up here at the top. We're going to hop right on in here into payroll costs. And, you know, what are some of the things that I would be doing right now to determine, you know, whether or not I have an issue. So the first thing that I would be thinking about with whether or not I have an issue or not is when I come to payroll costs, you know, right here, which is the first line item that we have. So I'm going to do a real simple calculation for you guys that I would be doing just to see, okay, am I going to have an issue? So let's say that, you know, last year, I'm going to keep this super simple because I hate math. I had $2.4 million in payroll costs for the year. If I divide that by 52, whoopsie, that was my per week number. So multiply that times 8. That's my payroll costs. If I multiply or divide that, I think, by 0.75, that gets my loan amount. Let me just make sure that I did that right again. That was my weekly. There was that. So just another sanity check equals this divided by 12 equals this times 2.5. Okay, we're in the ballpark of our loan amount, 500 grand. So, that's roughly, what I would have received as part of my PPP funding. So if I look at the new guidance, multiply that times 0.6, this is the amount that I can have on payroll. And then, let's see, this is the amount that I can have on rent and other. So, the first question that I'm going to ask myself, really the only thing that I care about in making a determination right now is, did I have, sorry about the dogs there in the background, but, did I have any sort of reduction in headcount that I need to be, aware of or cognizant of? If I didn't, I really don't have any concerns. I should be on the EZ form. But if I did, I need to start modeling out, am I going to spend these numbers in order to maximize the forgiveness amount? So let's say that I had a 50% reduction in headcount and it's really stayed that way. Remember, that's my weekly number. If I had this divided by 2, that's my new weekly number. If I multiply this times 24, that would be, again, sorry about the dogs. That would be my payroll number over a 24-week period. So obviously we can see that, all right, 553 that I'm going to spend is greater than 300 grand. But here's where first gotcha starts to come up. And let's say this is still 200 grand. All right. So where first gotcha comes up is if I go back to this PPP form, all right, well, I had a 50% reduction, and let's assume that I haven't done anything about that. So by default, and let's assume that I didn't have any salary or wage reduction that I'm going to get here in a second. Let's assume that I didn't have any excuse for this, like, hey, let people go, didn't try to bring them back, and I can't claim COVID on this one, for whatever reason, the case may be. So out of the gate, even though I spent 553 and I spent 200, so that's what I spent. If I divide that by 2, you can already see, look, I've got a problem. 376 is not 500. So I need to do some thinking in terms of the real, in terms of any planning that I need to do to start seeing, okay, is that really my FTE reduction? Is that really, do I have some sort of exception associated with COVID, or not? So just, remember that even though you spent the money over a 24-week period over reduced, on a reduced number, that you still have to factor in the FTE reduction quotient in your equation. So that's kind of the first gotcha that we want people to be aware of. The second gotcha, which is really the first gotcha in the calculation itself, is this whole total salary and hourly wage reduction. This baby is a real bugaboo. So I'm going to bring up the actual guidance from the SBA website itself. So this is the SBA calculator. So as you can see up here, they got table 1. Looks pretty simple. A lot of people have told us, my payroll company is doing all this work for us. It's going to be fine. I don't know. I haven't seen any report that a payroll company produces yet, not to knock them, but to know that it's really going to be fine. Because what you're doing on the SBA form is that you're just putting the number from Schedule A, but there's a lot of work that you have to do to arrive at that Schedule A, including this hourly wage reduction. Well, what does that actually mean? Well, what that actually means is I have to know whether or not I have one. So, if this was me, I kind of would sanity check, all right, did I make anybody take a pay cut or not? And by pay cut, real specifically, that is a pay cut. That's not a, hey, we're reducing your hours, but we're keeping your pay the same. Or, hey, Gary, you were full-time, we're going to have you go part-time. That literally is, you made $100,000. Sorry, guys, everybody's got to make a shared sacrifice. I need you to work just as hard, but for $75,000. So to understand the pay cut, what this basically is saying is that, all right, to know whether or not I had a wage reduction, really, I have to start, I'm going to use this employee number 2, I need to start with, all right, what did I pay him pre-pandemic, which my test period is January 1st, 2020 through March 31st, 2020. If this was an hourly employee, this would be their hourly rate that you were paying them, which is what'd you pay them divided by their hours worked. Now what you got them set up in their payroll system is it's what did you pay them divided by how many hours did they work, all right? Now, if this was a part-time employee, you'd want to figure out the annualized equivalent for a part-time employee. So during your covered period, which is going to be 8 weeks, 24 weeks, 12 weeks, I mean, whatever you end up using, this is the average of what you paid them. So, if you think about, well, what's the reality of what might have actually happened during this period, for, a couple weeks, I might have said, look, everybody's on a 50% pay cut or not paid at all. And then I gradually restored people, back up and back up and back up to where if you look at the average over the period, it's $70,000. All right. So the first problem that I've got is, all right, look, I see that the person has a problem because, 70 grand, which is the average of what I paid them, is less than $75,000, which if you read the instructions here, basically if you pay people on average 75% of what you paid them during the pandemic, which is still ongoing, versus what you paid them before, you don't have a problem. If you didn't, you do have a problem and you need to figure out what your reduction is. You might look at this and just say, 30 grand, I'll prorate that, that's the number. And my answer to that would be, oh, nay. We have yet more computations to do. What did I pay them pre-pandemic? And specifically, as of the payroll that was inclusive of February 15th, 2020. 2, what did I pay them between February 15th and April 26th, which is presumably when things were going to poo, but before I got PPP funding. All right. If 2B is greater than 2A, skip step 3, otherwise go to 2C. What this is basically saying is, look, if you didn't really make them if you didn't really make them take a pay cut during the pandemic time period, you don't really got a problem. You can move on. Otherwise, we need another test, which is what was their rate of pay as of June 30th, 2020, 90 grand. Okay, so now I've got my data points. All right, the next instruction, which is if 2C, which is June 30th, is equal to or greater than 2A, you've met the safe harbor. The people have been restored to their full wage. And remember, what we're really trying to do here, what we're really saying with this person is that, look, the average that we paid them was less than 75%. of what their historic salary level was or hourly, wage earning was, as long as that was restored by June 30th, we're good to go. If it was not restored, then I've got some type of reduction, which is what this is saying, because 90, as we can see, is not 100. Okay, it's 10 grand. No, it's not $10,000. Because the further instructions are, my baseline was $75,000. My average was 70. I made the person take a $5,000 reduction. That over my covered period of 8 weeks in this specific example, if it was longer, it'd be 24 weeks, is $769.23, which is how you get to this number here, which would appear right here, which then rolls back up to I'm getting there. Right here. So again, it's just, it's not super simple. So when you get to this FTE reduction quotient, this is another fun one. What you're basically doing is saying, all right, what was the average FTE on an employee by employee basis? So if someone's hourly, you're basically looking at, what are the hours that they worked relative to the total hours that they could have worked. That's just a formula. On an employee by employee basis, you can either use 0.5, or if it was greater than 0.5, you could use the actual number. But you're trying to determine what's the average FTE number that you had in place. In salary, I think you're using kind of your best guess, but at the same time, it probably should match what it says for weeks worked on your payroll tax returns on your 941. So for example, if I'm claiming Gary as 1 as an FTE right here, but my payroll tax returns during my covered period that I'm providing to the bank shows that Gary was something other than 12 weeks, which is what it would say on my payroll tax returns. Would anybody catch that? Probably not, but I'm going to have a problem probably at some point in the future. So you're getting your average FTE count here. This FTE reduction exceptions. So you add all these people up and you're like, oh my gosh, there's my average FTE count. And then I get this is kind of my first get out of jail free card, which is who are all the people that I tried to get back that wouldn't come back? I get to put a number right here in terms of total FTEs. Well, that's all interesting information. How do I use this? It's right down here under FTE reduction safe harbor 2. Which is basically saying, what were my average FTEs between February 15th, 2020 and April 26th, 2020? That's the middle of the pandemic, all right? I'm comparing that to pre-pandemic, all right? If 2 is greater than 1, then I have to go to step 4. Otherwise, it's not applicable because I got the same number of people in place. So, what do I care? However, I can also try to get back to, all right, I hired everybody back either by December 31st or whenever this application is submitted. Then I'm back at the safe harbor, meaning I've met my FTE count again. And then kind of my last question, I finally get to if the entry of for step 4 is greater than or equal to step 2. So I got all my people back. I've got 1. The FTE safe harbor has been satisfied. Otherwise, FT reduction safe harbor does not apply, and I have to complete line 13 of the PPE Schedule A by dividing line 12 by line 11 of that schedule. What is that schedule, you say? Well, that's where you go back and you have to figure out your average FTEs based on whatever test period you're picking, which could be these equivalent periods from 2019 or any rolling 12-week period of your choice. You're obviously going to pick whichever one's going to be the most favorable for you for the purpose of this calculation. But, basically, if you don't hit one of these two safe harbors, or if you don't hit the safe harbor based on you getting people back, you got to go through another set of hoops to then figure out what exactly is this FTE reduction quotient that I need to be looking at. Your only other get out of jail free card here is right here, Safe Harbor 1, which is basically, hey, things were really, really bad and I just don't have the jobs anymore. So again, how did we get here? How we got here was, look, I know that I'm going to have a problem because I know that I've had some fluctuations in FTE counts. So let me see how bad that problem is and what I need to do to try to get the number right so that I can get the maximum forgiveness available. So that felt really painful to go through, but I wanted to give you guys an idea of where you should be at in terms of trying to determine whether or not you're going to have an issue, or thank you, Jack. He's got Tylenol out. Whether or not you have an issue before you just say, look, I'm good, I think. I spent all the money. Because we have had a lot of clients that said, I spent all the money. Would you have any changes in the workforce? Yeah. Well, we probably should take some time to double check that you don't have any issues anywhere based on these specific dates, these specific calculations, and these specific counts.
Couple questions that have come in that it would be good to answer. One is from Austin. Are owner and officer salaries included in the payroll costs on line 1?
They are. It's just a separate schedule that I can go through.
Okay, cool.
With their own specific set of instructions around what's the max amount that you can claim versus the generic amount that applies for the employees.
All right, next question is from David.
No, I won't answer that if it's David that I think it
is. It's always good to have clean juice on here.
Oh, that David will answer your question. It's the other David.
Yeah, no, this is David, our client.
Got it.
So, please send me the link to the latest application from Adam. Is it different than the one SBA sent out 8 weeks ago?
Now, the application itself hasn't changed. What they have produced are just some more example calculations and worksheets.
And where can you find that if you need it?
The SBA website, but we can post some links on our website.
All right, cool. Next question is from Shelly. Paid an intern who worked 40 hours a week for 9 months, August 19 through May 2020. The covered period began April 14, 2020. How do we account for him from an FTE perspective?
Well, so this goes back to, you've got a couple different points that this person applies. First off, you're saying he was 3 hours a week. Is that right?
It was 40 hours a week for 9 months.
Okay. So that is effectively a full-time person during the time they work because this is on a work week level. So your first place that they got you is that he was there February 15th. So he's going to be in your FTE count calculation. Secondly, he was there from February 15th until April 26th. So in that sense, there's no reduction that ends up applying in this case. So it would seem that for him specifically, he's a 1 because he didn't change in your 2 periods, which would be February 15th payroll and then 15th through the 26th. So if you look at where that comes into place, you know, if he were the only person, he's really right here. Now, if you had a lot of other movement, it may be that you still have to go through the other hoops, but for the purposes of him, he's 1.
Okay. Hopefully that answered question for you, Shelley. Bob has a couple questions here. What's the percentage of ownership that matters? And if an officer owns 5%, is he listed as an employee or officer?
Believe that applied to C corporations, but it's probably in the owner instructions here. It was greater than 5%, I believe, in a C corporation applies as an owner. And I think it's pretty much anything in an S corporation applies as an owner. And it's right here in terms of definition of a principal.
Share your screen again.
Oh, sorry. We'll send out a link to the ownership guidance because that was a specific SBA FAQ. But I believe it was greater than 5% for a C corporation, and then pretty much anybody that was a managing partner, or sorry, a general partner, like anybody who was active in either an S corporation or an LLC.
All right, cool. Hopefully that answers the question. Obviously, we had a lot of interest in this particular explainer because we've about doubled from our last week, or actually more than doubled, having everybody on here.
And I think the key thing, I mean, the point in going through this is that the key thing is in terms of just determining whether or not you have a problem or not, you really need to do that. And those are really the two kind of gotcha areas that I see is if I had some movement, what exactly is my FTE reduction quotient? And do I need to do anything about that? And if I had some wage movement, what's the wage reduction? And is there anything that I need to do about that? Outside of that, I think the other important factor to consider is that, look, this is probably going to take, 15 minutes to a half an hour per employee to go through, because even if you're fine, if you're anything other than, hey, didn't make any changes, you still have to fill all this crap out. So, and you're certifying that it's right. So to know that it's right, you got to know the underlying calculations. And those two are the two big bugaboos that are out there on this form.
Next one is from Martha. So here's the scenario. Our first payment is due 10/30. We're trying to hold off on applying for forgiveness, hoping our small loan will be automatically forgiven. Do you recommend applying for forgiveness before the first payment is due? And if so, do we still need to make the payment if we have not heard back from forgiveness application?
They stretched the first payment due date out to 10 months. So a lot of banks, though, we've seen it said, hey, by the way, your payment's due. But like they haven't updated it for the new guidance that's come out. All that said, I believe that if you got the loan pre, whatever date they passed the last legislation, maybe Jack knows, I'll keep on stalling so you can get an answer, is that you had to ask your bank for that stretch, but there'd be no reason that your bank wouldn't honor it, I don't think. Jack?
Yes, that is, so yeah, communication with the bank. And so I wasn't aware that there were notices that were going out with respect to due dates because of the revised guidance. So that's the first I've heard of that.
Yeah, but that basically is only going to apply to people that were, I think, pre-June, when the last legislation went into place. So it would be people that originally had the option for an 8-week or a 24-week period, which have been early adopters of the loans. at the bank, at your and the bank's discretion, you can opt into the deferral of the payment for a longer time period. So, I mean, I would be asking the bank for the referral instead of saying, "Oh wait, let me go pay the loan back and then try to get money back from you because now it's been forgiven."
Yeah, you're not going to get your money back.
Thanks, Jack.
It could be hard to extract it. If you do that, I think you had a packet of something that you would need, Jack. Is that right? Did you have something?
I think I ran out of them. Or I've exceeded, and I got on late too. So I think I've exceeded the daily allotment of having. So I need to go find some more maybe later. I need to figure it out. But yeah, I mean, I got on midstream what you guys were talking about, and I'm like, okay. So, but thank you for going through all that, because I mean, it is crazy. You have to go back and this and that. I mean, it's like if you do your own taxes, it's craziness. But anyway, thanks for walking through that.
You're welcome. And again, it's an employee by employee basis. If you had any movement to complete the application, you need to do those schedules.
Next question is from Melanie. Is the safe harbor date for reduction of wages, is it still June 30?
Yes.
All right. Next question is from Peter. If our 24-week period is over on October 22nd, when would you recommend we file our application, or latest date we should file?
You got 10 months after that to file. So I probably would wait to file until after the new year, unless they come out with some guidance that says the expenses are deductible, or, hey, we're not changing anything from this point going forward.
All right, next question is up from CJ. Have they determined if forgiveness is granted, how it will affect your 2020 tax obligation?
Well, right now, the expenses are not deductible is how it would affect it. So it means the loan's taxable. That's the point in waiting.
Yeah, just to reiterate that, the point, one of the points of waiting is we just don't know. And so, and I don't know, and apologies for coming on late if you have already talked about this, but kind of even up till yesterday, it seemed like there were unlikely that there was going to be resolution on anything new, but at least there was reporting that the Secretary of Treasury and Nancy Pelosi at least talked yesterday and decided, rather than ramming something through the House, that they would hold off and have more bipartisan conversations, maybe recognizing that would be a futile event to ram something through the House that isn't going to go anywhere in the Senate anytime soon. So that's what the latest and greatest on that is, which is another way of saying that nothing really is going to happen anytime soon. One of the discussions that we've had in prior sessions of this program has been, we don't know exactly how that's going to look, the second wave of stimulus. And there is a possibility that it will relate back to the first bucket of stimulus. So for example, the $15,000 cap or the $20,000 cap on owners, does that somehow get modified as part of stimulus package number 2? Or does each one stand on its own, so that way there is a completion date for package number 1, and then package number 2 has its own lifespan, and there's no relation back to each other? And depending on who you talk to, nobody knows, because I think there's potentially a lot of corrective action that can be taken with some of the stuff that we don't know. We keep speculating about that package number 2, in order to get everything realigned the way it should be, that there is a relationship back. So that's why we have been saying that unless you have a really good reason to proceed with the forgiveness, including peace of mind, I mean, that's a legitimate reason if you just want it off your plate, that you probably should wait, because there's just more unknowns in the interplay between the two that could impact. And I go back to what happened when there was panic about the auditing process of the applications, and then literally at the 11th hour they said, well, you know what, 2 million and under, we're really not gonna take a really good look under the hood to see what's going on there. So things like that, and people were retracting their applications and panicking as to what they should do. So trying not to create a panic, and doesn't seem that there's a good reason to proceed forward on the forgiveness applications. So, and if somebody feels differently, happy to chat about that and discuss that.
All right, next question is from David. One of our stores sent a panic email saying they had 3 weeks to file for forgiveness. From what Adam said, if that's true, it's likely they got a first payment notice from their bank and are trying to file before having to pay.
Can you read that one again?
Yeah, so one of the clean juice stores sent a panic email saying they had 3 weeks to file for forgiveness.
Yeah, so I mean that's basically goes back to what we'd said earlier, which is you basically have if you were an early adopter, then you're under the old regime, which means whatever the time period was, it was like 60 or 90 days or something like that to apply for forgiveness after the initial 8-week period. If you went back to your bank, though, you would fall into the extended deferral period. So what's happening, I think, is the banks just haven't automatically updated internally the extended period for everybody, but obviously everybody's going to want the extended period. So that would be my suggestion, especially when again, it's classic big bank miscommunication. Since the SBA isn't even freaking processing the applications until this week, it just makes sense to go ahead and get the extension of time, which one would think would be an automatic approval by your bank.
Yeah, I'll throw in a Jack theory into that, which is that they have to proceed with the kind of the most common denominator. So they have a choice either to throw that out there to protect themselves for those that really do have, who might have a deadline obligation, meaning perhaps they didn't go to the bank and say, hey, I would like to take advantage of the modifications, or do they modify their algorithms and go back to their computer people to be able to differentiate between them. So I would think that they probably are not going to take any more expense in trying to modify their software programs. So they're probably just sending these out because the computer is just doing that as it was told to do. And to Adam's point, that your best thing to do is if you get something like that, to contact your bank and make sure that everyone is aligned with the fact that that notice really isn't due. It could be that depending on the bank, maybe the bank is mistaken, or maybe they are misinformed, or maybe they're misinterpreting. So worst cases, you let it go, based on what Adam and I are telling you, just, hey, everything's fine, but you really need to communicate to the bank to make sure that they don't then automatically, maybe by the algorithm, put you into default because you didn't make that payment because the bank was expecting to see it. So back to communication with your bank and with your banker to make sure that everyone's expectations are aligned properly.
Next question is up from Martha. We made no reduction in employees or hours. However, one employee chose to take early Social Security, which drastically cut her hours and wages. We have a signed form from that employee that this was voluntary. Will we still qualify to file for the easy form?
Yeah, I would think so.
I got this question earlier this week, and we addressed it one-on-one, but for anybody else, because I've heard this more than once, and that is one of the reasons why we've been pushing for wait till 2021 to do the filing is right now, there is not forgiveness if at least on, it's still taxable. If you get let's say you get $1 million PPP loan and you've spent all the money, you could have up to a $300,000 tax bill the way it is. I think it's an unintended consequence. I think everybody here feels that way. But let's say worst case scenario happens and Congress says, oh gosh, we actually really need the money. And yeah, so sorry, but that's going to be taxable. If you delay into 2021, your tax bill isn't going to be until 2022 because it's going to be realized in 2021. Is that right, Adam?
Yep.
So just another reason we're hoping, and I know that AICPA and others are lobbying to make sure that that potential oversight is addressed, because it would really go against the spirit of, I think, the intention of what PPP was designed to do. But nonetheless, it's a potential gotcha out there. Any other questions from the gallery? We still have over 80 people on this thing, which is pretty cool. Here we go. Nazrin, I thought I heard you say we could use PPP time period anytime between 8 weeks and 24 weeks, like 12 weeks. Is that true, or do we need to choose exactly 8 or exactly 24?
You can use any time period per the application, even though it doesn't give you any guidance on exactly how you should modify the calculations to do it, which is why I've just thought, there probably is some type of benefit if you had massive reductions after the forgiveness period, or the cover period that you're using would be the only scenario where I'd see using less than 24. But so with that in mind, if you ended up using 12, that's totally fine. You just modify the calculations in terms of what the annualized wage numbers are, and then obviously the number of weeks in your FTE calculation would be different as well.
All right, man, this has been awesome. I mean, we've answered now be 14 questions and gone through the deep dive, and my head isn't throbbing yet, but I know I can call Jack if I need some Tylenol. All right, a couple more questions here. This is from David. Can Adam go back to the schedules where you track individual employee FTEs for checking whether you met the FTE count, and walk through one employee who was a wage earner working 15 hours a week at $15 an hour during the first 3 weeks, then quit?
No. I mean, at the end of the day, with that, in that specific example, if the person quit and was reduced, and like if the person quit, so the FTE calculation is going to be the FTE calculation on that one. And then if this is a person that you tried to get back or replace the position and you had no success, you would just adjust for that down at the bottom of the form where it says FTE exception, which is where you're supposed to put the people that you tried to get back but you couldn't. That's how I would handle it.
Okay. Hopefully that still answered what he was hoping to do, even though you refused to do what he asked. Next question is from an anonymous attendee. Is the FTE reduction quotient simply a percentage reduction in employee discount forgiveness by the same percentage?
Read the question again.
Is the FTE reduction quotient simply a percentage reduction in employee discounted forgiveness by the same percentage?
Yeah, you're basically saying, look, I've got all these payroll costs, and they are what they are. I mean, if you spent more than the loan amount, it could be more than the loan amount. So if you got like 500 grand, but you really spent 800 for your cover period, the reduction quotient applies to people.
Okay, a qualification from David, but what was the average FTE?
Say that one more time, Gary.
Yeah, he said, but what was the FTE? So, and this references the earlier question. So when you're tracking individual employee FTEs for checking whether you met the FTE count, and walk through one employee who was a wage earner working 15 hours a week. So
Stop,
okay.
David. Okay, so you've got the test. What was your average FTE count as of the February 15th payroll period? You have the next average FTE count, which was from February 15th to April 26th period. And the only change that you would possibly make is that, look, if the guy, quit, the person quit, and that would be a reduced, FTE number in that scenario that you're comparing back to February 15th. But then if you try to replace the position, that's where you're going to add it in down at the bottom of the form to say, I tried to replace the position. Now, if the person quit, it didn't work the entire period. So instead of using, 320 hours available for that time period, there was only 24 because the person quit. That's your choice. Like, there's no guidance on exactly how to do that. But I think that I would probably use the longer period of time and then add in, I tried to replace the position, because otherwise you're kind of being cute and saying, well, that could apply to anybody. Since I fired him halfway through, they technically only had 80 hours that they could have worked out at 320, which was not the intent or the form of the calculation.
All right, next question. Sorry to come back to this.
But only calculate that when the moon is full and Saturn is aligned with Venus.
All right. Back to this next question. Sorry to come back to this, but if you were an early adopter, is your bank required to allow you to defer payment until 10 months after your covered period, or is it at their discretion to require an earlier payment?
It's at their discretion, but they're not incentivized to ask for an earlier payment because it just creates an administrative burden on their hand to give you money back and service the loan.
All right, cool. All right, David, he is going to call you because his question is serious. So that's
Just
fine.
put whatever you want.
All right. And you've got his number, I think, David. If not, ping me. Let's see. Any other questions out there? Oh, here we go. Came in late. Sorry if you've already answered this. What is your thought on starting calculations once the money is up, but before the covered period is over? Or would you rather wait until the 24-week period is over and enter that full amount of payroll spent?
Again, I go back to, I don't know why people would use the earlier period unless it was bad for them to use the longer period based on the FTE reduction quotient.
So while you're waiting for the next question, let's spend a moment kind of talking about some commonalities that we hear here, but I also hear outside of this program, and I know that Gary and Adam do as well. So a couple things. Remember that first, that there are different components to this whole program. One is obviously submitting the application, then it is getting the money, then it's seeking forgiveness. And on the forgiveness aspect of it, get questions all the time that say, well, wait a minute, you said I have say $100,000 of money, and you're telling me I can only give myself 20,000 because I'm an owner. And I said, not exactly. You can give, depending if you've done everything that you're supposed to, that I'm saying that you can only get forgiven for the $20,000. And that is a huge difference, because people are panicking and saying, well, what, I have all this money and you're telling me I can't do anything with it. That's not what we're saying. We're saying that in order to transform it from a loan, which is what it currently is in its status as being given to you, into a grant, then there's certain limitations. Same concept for the process of the application process, which is you have formulas, and you have a set of formulas that relate to an 8-week period, a 24-week period. And so go through those calculations. And then you get to a point where, okay, wait a minute, I'm not 100% in compliance with the original intention, the original rules with respect to the forgiveness. Then I have to look at what are the exceptions, the safe harbors that say, you know what, borrower, it's okay that you're not 100% in compliance. We're going to let you off the hook if you meet these other things that get you to that point where you're not penalized for not being in 100% compliance of the original rules. So, you know, at each of those pieces, you have to independently establish and get to the finish line of each of those pieces. And then, I mean, this is basically, I'm kind of reiterating exactly what Adam did a few minutes ago with going through, you know, here and then here and then here and here on the forms to get to a point where you, okay, this is how I feel about the forgiveness. And then add on top of that, the question, well, I know what my numbers are, should I go ahead and do that? Well, your numbers are based upon certain assumptions of what the rules are now, which may change, as I said before, may change, may not. They may say, again, this is program one, those are the rules, here's program two, it's new, let's be done with program one. We just don't know. Nobody knows really, because they're still arguing about it on Capitol Hill. So, you know, just that's a long-winded way of saying, go through the process, go through the numbers, choose your adventure, get to a certain point, feel comfortable about it, and then it's a wait and see. So wait and see what happens, and likely after the election. You know, people are saying, well, you know, maybe they'll get corrected in 2021. I think there's going to be a significant amount of pressure after the November election for about, you know, 6 weeks, actually probably 4 weeks, because no one works, you know, Congress doesn't work over the holidays. And so, you know, what can be done before year end to say that, okay, we now know the economic impact for tax year 2020 and have some resolution to those issues rather than punting it into 2021, which is essentially what's happening now, which is, okay, don't seek the forgiveness. The fact that they haven't resolved that one issue is now informing and causing behavior by all of us to say, well, maybe, you know, I shouldn't seek forgiveness, because if I get it, now I have a potential problem, because now I'm going to get a tax bill. So it's all interrelated, and we're all hoping for a resolution of all these things. So I would say that, you know, I expect that there'll be a lot of action between mid-November, mid-December on these things, and what kind of action that is I think, hinging upon the results of the election, the results of Senate and House elections as well. So it's a wait and see.
This question is from Cindy. Is there a formal form we need to send to our bank to defer the payment, or a simple email letter request? Is there required wording?
I would try an email first with your banker, and then see where you get to.
And I have a caveat to that. Set it for a red receipt. So hopefully you get the red receipt. And also try to be insistent upon getting a written response from them, even if you talk to them over the phone. So if it is, hey, you send an email, no response, you call them, you get them on the phone, and they say, yeah, you're good. Get an email from them, even if it is, hey, Mr. Banker, I want to confirm our conversation from earlier today where you said X, and print that out and put it in your file. And hopefully you'll get a response back, and ask for a response to say, please reconfirm, and hopefully you get a response back. But again, it's about protecting yourself and with documentation as much as you can. In my world, many times, a phone conversation never happened, right? At least that's what the other party selectively remembers. Sometimes clients selectively remember that too, or don't remember. So just everything, documentation.
That's why we have Jack on this call. It's good to have a lawyer on here. So here's the next question. Calling in late, not been on for a while. Sorry if I've missed something here, but are most people not seeking forgiveness now and waiting, or have many already applied for forgiveness? And I'll just answer that. Our approach has been wait, because there is tax liability as it is right now that we're hoping gets furloughed or addressed. So our recommendation probably is that you wait. And how many, or have many applied for forgiveness? We know some, but as of, I think yesterday, 0 have been forgiven. Am I correct in that, Jack?
Yes. Sorry, I had to mute. While you're waiting for the next question, I have another comment that came up in some of our transactions and some of our M&A transactions that with respect, and it's more so in the stock deal, but really the SBA doesn't make a differentiation, my understanding, between a stock deal and an asset deal in this particular instance, which is that if there's going to be a change in control of a business, then what we are being told as transactional lawyers from our banking lawyers is that you need to seek permission from the SBA and from your bank for that transaction. And the consequences of that potentially are that you are in default of the loan, and it could be potentially callable. And I'm talking about PPP loans, right? Bless you.
Sorry about that.
That's all right. And so, fortunately, the thought is that the notification may take only a couple weeks or so, rather than months. But that's not helpful when you're trying to close a deal that has a PPP loan in the mix. Fortunately, the one of the ones I'm working on now, I've confirmed that doesn't have PPP in it. So, because that was basically, we may as well just take a break for a couple weeks in order to deal with that. So I also say that as here we are October 1st, as we get closer towards the end of the year, and you start, if you're involved in an M&A transaction, having to schedule that out to make sure you end up closing before the 31st of December, if that's what you need to do, and you have to factor in that consent into your timing for the deal. So just a tangential side note.
Awesome. Well, you guys have answered 22 questions and gone through the form. That is amazing in 59 minutes. Any other questions out there? And while we're waiting, in case somebody wants to slip another question into us, this recording, for those that came on late, will be up later on this afternoon on the BGW CPA YouTube channel, where we've got all of our other ones that go back to, I think, March the 24th, if I remember right. So they are all there, and this one will be there too. And we'll be back next week, same time, same place, on the same BAT channel. Any other questions before we go, or any other comments from you, Adam or Jack, before we leave?
I think we're good.
All good.
One more question has come in. Okay, CJ, thank you. Yes. All right, cool. I think we are adjourned.
All right. Thanks,
Have a great
guys.
week and a great rest of the day, y'all.
All right.
Take care.
Thank
Bye-bye.
you.